Hey traders, Raghi here, and in this week's Trade of the Week, we're going to be talking about the US dollar index primarily, but coming from the aspect of being a Forex trader, trading the spot market, what are the relationships that allow us to take advantage of this weakness? Now, first of all, if you want to play the dollar index directly, DX or UUP, the ETF, is a very powerful way to ultimately trade this market, Euro US. On one side of the coin is the dollar index, on the other side of the coin is Euro US. They are inverse and pretty much the same conversation because 57.6%, I believe, of the dollar index basket is euro. That means everything else is a little bit of fairy dust, a little bit of window dressing. The Euro US and the dollar index are pretty much one and the same. One moves up, the other moves down. And obviously, most traders, whether they would consider themselves currency traders or not, are going to be currency traders this week with the NFP. What ultimately will the dollar index and the Fed fund futures reflect about non-farm payroll and what will we see traders start to discount based upon the jobs number and a likelihood of the Fed acting in June? Probably not. So I'm going to show you what the Fed fund futures look like right now, perched up at 99.61. Hardly a hawkish looking June contract. But it's good to know where the contract is in front of the Fed, in front of the non-farm payroll. So that's kind of setting the scene. So I like to look at the market from the aspect of, there's two O's every week. There's the obvious and then there's the overlooked. I think the obvious relationship a lot of traders will look at will be the Euro US. You can look at EC futures. You could also look at the FXE. Remember, currency trading does not limit you to the Forex. I think that's a misconception that a lot of traders have. In fact, tomorrow, Tuesday, May 3 at 8 p.m. Eastern, 7 Central, I'm going to be doing a 1-hour presentation highlighting five recent trades in a free webinar. You can register, I believe, either at the simplerforex.com website or Simpler Options, or just shoot me an email at raghi@simplerforex.com and I'll give you the hookup. But I'll be walking through some of these stories and some of the major touch points that I use to build every single trade that I take. So whether you want to take Euro US, now what's so interesting about Euro US? 115. I think 115 is going to be pretty tempting for a lot of top pickers to want to step in. It's going to be too tempting for those contrarian traders. If they step in at the psych level and begin a correction, it will be a correction. The back end is a swing buy. So one approach would be to take advantage of what is an overbought weekly market with puts. I'm looking at June puts with 113 strikes or 113.50. So I'm using the Euro US spot to set up the EC futures trade because you can't trade options in the spot side of things. You go ahead and take this Euro US conversation to the futures market. Or you can do, again, FXE. They're all the same things. They're just different iterations of euro versus US dollar. So that's the obvious trade. I think it's the obvious because the US dollar is in play because of non-farm payroll, but I don't believe NFP becomes a game changer for the dollar index, maybe initiating a correction in the DX, which I would be very happy to sell into on a movement higher. One person's relief rally is another person's short squeeze. I want to get opportunistic on that. That's the Euro US. And that's the obvious play. What about the overlooked play? I like this one far better, and that is US dollar versus Canadian dollar. Take a look at the heat map with me for a moment. Take a look at the US dollar column, which is all the way here to the right, and look at my contrasts. Sell US dollar is really predominantly the narrative. Against what? Euro? Not a lot of contrast there. What makes this work is their very tight inverse correlation. But I don't trust yen, so my next best strength play against the US dollar becomes sell US dollar. I mean, look at this. This is like a totem pole. Strongest to weakest, right? So I want to sell US dollar, buy Canadian. Now, why am I looking at Canadian dollar? The Canadian dollar has Stephen Pelosi coming up tomorrow, We have a jobs release, kind of the NFP of Canada, coming up on Friday. This pair is ripe for a bit of a relief rally, profit taking, short squeeze, call it whatever you want. At some point, the Bank of Canada and Stephen Plow is going to want to throw a little cold water on this runaway strength play. Into that Canadian dollar weakness, I will be absolutely willing to buy loonie, buy Canadian dollar, and no better place is there than against the weakest individual currency story out there right now that I trust the narrative of. You might say, hey, Aussie is really weak, Raghi, but we have the RBA coming up at midnight. We want to wait to see what the Aussie emerges as after the RBA. So what I want to do is wait for a correction into the hot zones this week. Where am I looking for corrections? Aggressively 2670 or up against 2770. Now, not all of you are playing spot. No problem. Let's take this conversation over to the futures. Inverse correlation, right? This is quoted as Canadian dollar versus US. If you're playing spot, you're shorting the dollar Canada. If you're playing FXC or CD futures, you're waiting for a pullback to approximately 79.05 aggressively or 78.40 conservatively or down to 77.85. So you'll notice there's three different levels. What do you do with that? You build a small position up here at the 79.05 area. You build a slightly larger position down here at 78.40, and you build the bulk of your position down at 77.85. Now, I know this video ran a little long. I'll keep up with this narrative in the chat room when I see you, but keep these two in mind. The obvious, Euro US, and the overlooked, which would be the dollar Canada. Both are US dollar shorts. We want to buy the euro against the US dollar and buy the Canadian dollar against the US dollar and use the economic releases to take advantage of corrections.